Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. I am in sunny San Antonio, Texas, where the U.S. Meat Export Federation meeting is underway. You can guarantee over the next 3 days, we're going to be talking a lot of what's happening in this cattle industry. You're going to see folks mingling around as many people happy to be out and about on a beautiful day. The good news is we are getting some rain back home, which is what we need for these pastures to continue to keep them greening up. So 'tis the season. We are in the close to Memorial Day. We know our Memorial Day purchases have been made. We are pushing towards the summer. So we are going to see those lower cattle numbers. And that's exactly what's been going on this week in the trade. As Brad Kooima joins us, he is with Kooima and Varlick out of Sioux Center, Iowa. And Brad, I think that is it. I mean, Memorial Day purchases have been taken care of. Now, I hate to call it the doldrums of summer, but for the cattle industry, in many ways, it is.
Well, unfortunately, you're right. By the way, I'm a little jealous. Kind of a dreary day here. It looks nice there behind you. Good for you. Yeah, we've talked about this on your program a number of times that, as you start to approach Mother's Day and the better weather and Memorial Day, and then the end gate of that, though, is when you get about 10 days ahead or so of Father's Day. And we're starting to see that in the crosshairs now, where you see a feature shift a little bit away from the middle meats, the grill type cuts, away to maybe more of a emphasis on, people are on vacation, more of a hot dog, hamburger kind of a deal. Although I would say this, I think the COVID pandemic, all the negative things about the COVID pandemic, the one positive is that I think we did retrain a populace to understand that they can cook a steak at home and it's pretty good and it's a lot more economical than eating out. I would like to think that domestic demand is going to hold together a little better than normal. But as you go to this time of year, the supply of cattle is very cyclical in the north. You come out of the yearling crop, they're gone. We're just getting into the calves, and we're going to ramp up the supply of cattle for sale here in the north in the next 2 months, especially. And while I'm not particularly gloom and doom bearish by any means, I mean, who's kidding who? We had 3 out of 4 months of record placements back there last fall and winter, and so we got a lot of calves to kill. Now, on the plus side, we have every incentive to be current, and we are very current here in my backyard. In fact, I don't remember being this current all the way back. Probably the comparable time would be 2014. Stop the feed bill, get the cattle sold. The futures are trading at such a steep discount that they're worried that looks like it's going to go lower, and so they're highly incentivized to sell cattle pretty easy. So.
Is there any concern, before we talk more about these cattle prices and things we're seeing, is there any concern as gas prices continue to inch up that's really going to have an effect on our meat movement this summer?
There's a real concern about that. There's a couple of the meatheads that I talked to, probably shouldn't call them that, commercial people that are in the meat selling business, right? They're very concerned, particularly when you couple that with, a statistic that there's a scary high percentage of families that live from paycheck to paycheck, higher than one would think. And so when you start changing the cost of transport, particularly somebody that has to drive to work every day, that money has to come out of the budget somewhere. And, typically beef has been something that people have always described as the demand being somewhat elastic. In other words, depends on what it costs and how things are going, right? And the other thing I think that on top of the high gas prices is this correction in the stock market, where people, I think, seem to have a little more confidence in spending when their 401k looks good and maybe not quite as much when it doesn't look quite as good. So we got a couple of shaky demand things here that we've got to keep our eye on. I certainly hope somebody can figure out what to do about this gas price. This is ridiculous. Crude oil isn't anywhere near where it was when it was at the highs. Whatever. This deal it just kind of stinks. Hopefully somebody gets a hold of this thing and figures out what's right.
Well, we had a cattle on feed report last week, and some initially thought maybe our cash trade was in anticipation a little bit of what those numbers would say. Holding steady this week, is that going to be the trend for the next couple of weeks? And how much of an influence are those cattle on feed numbers?
Yeah, I would have, if we'd have done this at 10:30 this morning when the market was 50 higher, I'd have been, look at that. I told you it was going to be all right, right? A little disappointed how we closed. I'm not going to lie. I thought the Monday trade was, my friend Charlie McVeigh used to say, when you whip the horse, you'd better run. Okay, so we had a bearish cattle on feed report on Friday. Placement number was crappy. market opened lower and they couldn't keep it down, come roaring back. That's the way you put at least a short-term low in. Perfect. We're way oversold. We're big discount to cash. Everybody's positive cash is going to be 1 to 2 lower. Heck, we killed 680,000 last week. The beef's got to be bad this week. So all of that and what we've actually had is a beef market that's generally steady, and the cash market that is surprisingly steady up here. Quite a few cattle trading at 142, fully steady with last week. And probably the thing that's limiting the cash, Susan, honestly, is that we don't have enough cattle that are very fat here. Otherwise, I think we'd sell some more because that we've pulled them ahead and we're that current. So I think the surprise is going to be that the cash is going to linger longer up here than one would have expected because of the currentness. So let's hope that's the case. And that will also soften or cushion whatever low we end up making, which I don't think is going to be much lower than the mid 130 range. 135 or something like that wouldn't surprise me, particularly with the pull ahead of the cattle. And maybe by the time we get to fourth quarter, we'll look at a lot better things than this.
So we do have a consumer question that I was asked to ask you, and that's dealing with the fact that we've been talking the last couple of weeks on this show about the number of cow slaughter obviously increasing, heifer slaughter increasing because there wasn't the pasture. So this guy's wondering how much is that going to affect his meat prices in the store? Not now, but more towards fall or winter.
Reminds me of the CBS News interview, where all they could worry about was this poor consumer having to pay more. And I'm sympathetic. Don't get me wrong. Obviously, there's part of this argument has to be talked about with retail margins, which, if you remember my super professional deal a couple of weeks ago when I held up that piece of paper to show you how bad it was, right? I mean, there's little that the producer can do to control the margin between him and the packer, and particularly, I haven't thrown that away, by the way, that ridiculous margin that the wholesaler has got, the retailer to the wholesaler. But to try to give this person a question, an answer to his question. The key to this whole thing, it seems to me, is that you have to have enough improved pasture conditions consistently all summer long this year. One robin doesn't make it spring. One rain doesn't make North Dakota, South Dakota, and there's still areas of Montana that are critically dry. But let's work on the assumption that we go back to normal. We get enough rain that these guys can do. Okay, so then what they'll do is instead of killing all these cows, second biggest cow slaughtered last year in the last 20 years, second biggest, second only to 2011. The kind of heifers that we're killing there's weeks here where we're killing 45 to 50,000 more heifers per week than the 5-year average. All those heifer calves last fall went to a feed yard. Almost none of them were held back as replacement heifers. When they make that step, if they do this fall and they have grass, okay, then you're talking about 14, 15, 16 months from now is when that's when you see a change in supply. So I think we'll see some shift already by the fourth quarter this year. I think by the first quarter of next year, you'll see some price improvement, which obviously is going to trickle on down the line to the retail level. Okay, I'll be smart here. If he hasn't bought a freezer yet after COVID, get locked and loaded by 2023, because this cattle thing is going to get a lot higher, in my opinion, because of that expansion phase, that expansion cycle that'll happen. Maybe the retailer will eat part of that. Maybe the packer will. He probably will, right? He'll probably make smaller margins.
All right. Sounds good, Brad. Thanks for joining us this week on the Cattle Call.
Yeah. You're welcome. A little bit frosty today, huh?
Well, we want to thank everybody for joining us this week. Again, we're at the U.S. Meat Export Federation meeting taking place in San Antonio along the Riverwalk. But we want to remind folks that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.